Okay, everybody, it's me, Gregory Mannarino. It is Tuesday, November 21st, 2023. It's a beautiful day. Every day is beautiful. Every day is just lovely, isn't it? Let's talk, you and me, on this pre-market report. So I want to cover something I've been talking about here because we may be there. What am I talking about? We've watched this market go straight up literally for like 3 weeks. We had maybe one day where it dropped after Powell said, oh yes, the Federal Reserve, we may be raising rates because monetary policy may not be restrictive enough. The next day, the market roared back and then some. This is a game. The Federal Reserve is playing a game, and I believe that market participants, people like myself and you, are well aware that the easy money is coming, and it's just not going to stop until it does. The mechanism of pulling cash into the now, the faking going on with regard to the issue of liquidity, skyrocketing debts and deficits, and now crude oil coming back in play. It's a perfect setup. It's a perfect setup for the market to go higher. But again, as I started with here, this market it's gone up for 3 freaking weeks. It's just not normal for there not to be some profit taking. So what I'm going to say here with regard to the market, and I have other stuff to cover as well with you here, buy the dip. You got to buy. I am going to be buying the dip, okay, as long as a couple of things remain in play. Let's talk about that. Look, you don't just blindly throw cash at anything, especially this freak show of a market, stock market. But if we understand how the dynamics work and we know where to look, well, then we can obviously take advantage of everything. And that's what we need to do in this kind of environment. So if in fact they keep risk at bay, something I've been talking about now for a while, and we could gauge this in real time, people, by watching the Mannarino Market Risk Indicator, MMRI. Free to everybody. Link in the description of this video. If they can keep risk where it is now, okay, even though we are in a high risk zone, that's fine. As long as we don't go wavering all over the place. I mean, we were in an extreme risk zone up until the last FOMC meeting, and then we watched a phenomenon occur. Some entity out here with enormous firepower is buying all the debt. I mean, imagine my shock, imagine your shock. We know who it is. Okay, so, and we've talked about this over and over and over again. If they can do this and if they can do that. If, in fact, the Fed's going to keep buying the debt, and I think they're going to. I think this is a new debt buying spree unlike anything we've ever seen, especially moving into the end of the year. You know about this. We've covered it at length. They continue buying the debt, keeping rates suppressed. If they continue to weaken the dollar, okay, and the Fed can weaken the dollar like every other central bank can by dumping their own currencies and buying foreign currencies. The Fed's doing this. It's in our face. You're not allowed to know it, but it's going on. So those two key factors, plus another one, crude oil, they can prop this up. Where do you think the market's going? So as I said, look for a drop. Look for a drop in the market. I'll keep all of you on top of this, I promise. And what I will be doing here, again, my strategy is not for everybody, okay? But I will be buying more. I own a lot of this market right now. I intend to buy more of this market on any dip moving forward, as long as risk remains at bay based on the MMRI, or at least doesn't go much higher, based on the 10-year yield or what the debt market is doing, the dollar, and crude oil. That's it. These are our keys, you understand, to taking advantage of the situation. Now, if we understand, you and me, that the market situation remains risk on, and I mean risk on in letters that are blaring across the sky, that's going to give us opportunity to buy other assets on the cheap. I'm referring to my favorite asset of all time, of course, which is silver, gold, It would be my second favorite asset of all time. And then platinum and palladium falling in a close third there. If you had to buy one of these things, you know what I'm going to tell you. It's silver. Secondarily, gold. Silver remains so undervalued. It's just laughable. It's unbelievable based upon, this market that is in la la land. I mean, believe me, look, I understand that, and I get it. Believe me, because I know I'm going to hear from a lot of you. The market is overvalued. It doesn't make any sense. It doesn't. It doesn't make any sense. And it's massively overvalued. But that does not mean that there is not opportunity here. You have to understand how markets work. Let me cover this again. When a market is overvalued, like it is now, beyond anyone's wildest imaginations, it's been there for a very, very long time, it's actually bullish. Okay, and when a market is undervalued and it seems to stay stuck there for quite a long time, that's bearish. You got to look for reasons why things are going to turn around. And in this environment where you have the biggest player on the planet Earth continuing to rig the debt market, rig the currency market, I'm talking about the Federal Reserve, and of course propagating wars around the world. That's also central banks. That's what they do. It's easy to understand what we need to do. It just couldn't be more simple in my book. Looking at the market this morning, we got stock futures lower. Nothing major, but lower nonetheless. Is this the beginning of the pullback or that I've been saying is due for quite a while? Remember look, even though I'm saying this, I want you to understand, nothing is due. There's no such thing. When you hear somebody say what I just said, it's kind of ridiculous because the market is never quote unquote due for anything. It does what it does and that's all. But if you look at what's happened here, pretty much 3 weeks of solid gains, big gains as a matter of fact, it kind of is due. I mean, I know how insane that sounds. No one said I was well, but that's just that. Let's look at some other assets. So Bitcoin, crypto is relatively flat. Bitcoin still over 37,000. Gold and silver catching a bid this morning. Crude oil, what a run up since the recent drop. We erased all of that and then some. Right now this morning it's relatively flat, under a tiny bit of pressure here. Commodities, people, I'm going to tell you again, commodities. This is, look, when I'm telling you, all right, with regard to commodities, gold and silver, it's not that we're betting that tomorrow this stuff is going to gain in value. We're setting ourselves up for what's happening, what is going to happen down the line. Debt market meltdown, cash bleeds out of the debt market, bleeds out of the stock market, cash moves into commodities. I also believe it's going into other things too, people. You know what I'm going to tell you. Cryptocurrencies, I think, are going to benefit here. A lot of other assets as well. That's just the way it is. Cash doesn't fly away to money heaven. I know many of you believe it does, but it doesn't. It just moves from one reality into another. That's it. So if you can understand that, even if you were to burn it, even if you were to burn a dollar bill, it gets transferred from a solid into a gas. It goes someplace else. You know what I mean? I guess at that point it's kind of would become worthless. But barring burning it or some other thing like that, it just moves around in the market, and we want to take advantage of that. So what do you want to take away from this video? Okay, it's really simple. Look for an opportunity to buy more of this market on a dip, as long as, okay, risk remains at bay. Check the MMRI, again, free to everybody, link in description of this video. As long as they're going to keep buying debt, the Fed's going to keep buying, in my opinion. As long as the Fed keeps weakening the dollar, they're going to keep weakening the dollar, in my opinion. And as long as crude oil plays here, okay, we have a couple of factors to keep our eyes on. Buy the dip. Buy the freaking dip. And use those as opportunities as well in metals, if they dip. Look, I think I'm preaching to the choir here for the most part. We all know what we're doing and we know why we're doing it. And I think, I don't think we can possibly be beaten longer term if we keep our eyes on the ball. You got it? All right, people, that's pretty much it. That's where we stand. I hope I outlined this for all of you in a way that makes sense to you. And believe me, again, I am well aware of these twisted, out of control distortions that exist in the market. But I think we need to take advantage of these things. And I don't think the Fed's done. I don't think central banks are done. They're not done. Especially with the presidential selection cycle, especially the end of the year magic phenomenon that occurs pretty much every year, how the Fed props up the market so the fat cats at these corporations can get their big fat year-end bonuses. You know how that works. The year-end bonuses are based on year-end stock share price. Let's take advantage of that. You understand? We're smarter than they are. We're way smarter than they are. And that gives us a big edge, all right? This guy here loves you from the heart. I mean that with all I got. Please share the video. Get it out there. Comment. If you think I'm completely wrong, that's okay. Just tell me why. Okay? Don't just write, Greg, you're wrong. Although it may be funny, I mean, look, we all got to learn from each other here. And despite, the fact that I'm kind of an old guy here, I can still learn a new trick or two, and I'm willing to. So tell me where I get it wrong or I got it wrong, and I will evaluate it. And if I think you're correct, I will give you the credit you deserve. All right, anyway, that's it. I'll see you later, 4:05 p.m. Eastern Time for my live stream. I hope to see you there, all right? I am so out of here.